Hello, everyone. About 60 people joined us already, so I would say let's dive into our webinar. We're really happy that apparently not only us, but so many others have wondered, is anyone actually reading CSRD statements? And we're happy to share the results of our study today. My name is Christina Schilling. I'm a project manager and client relations lead at Nexa, which is an agency that focuses mainly on digital corporate reporting. And I'm happy to be here with Professor Dr. Maximilian Müller from University of Cologne. And in the next 45 minutes, we'll not only share the results of our study with you, but we'll also show a few best practice examples of how you can navigate users through your CSRD statement online and also enhance the user experience. Of course, you can also ask questions. You can just use the Q&A function and we'll answer them at the end of the webinar. And now, without further ado, I'll hand over to you, Professor Müller, to show the results of the study.
Great. Good morning, everyone. Thank you for joining us. It has been a great pleasure to collaborate together with Nexa and also the companies that generously allowed us to analyze the data. So give me a second to share my screen. I hope this works. Yeah, perfect. Okay. So my name is Maximilian Müller. As has been pointed out, I'm a professor at the University of Cologne. I'm also a co-founder of the Sustainability Reporting Navigator and a principal investigator in the Collaborative Research Center Accounting for Transparency. This work here is joined with Lea Hagemeyer. She's also affiliated with those three institutions above and a PhD student that I have collaborated with in the context of this analysis. So let us dive in to answer this question. Is anyone actually reading this? So to first give you a perspective of what we are looking at, I would like to spend a few seconds to explain the sample that we have analyzed. So as you can see here, we got data from 8 online annual reports with roughly 500,000 page views on these online reports from roughly 200,000 visitors that occurred over 3 months after the publication of the annual reports. So what are these annual reports? Who is this from? So those are 2024 fiscal year annual reports that include a CSRD sustainability statement. 7 of the companies have fully adopted ESRS. 1 did so partially. These companies come from 6 sectors like consumer goods, food and beverage, transportation. The market cap range is from 1 to 100 billion euros. The average is 43 billion euros. And whenever we present results, we are equally weighting those 8 companies in order to best convey an average result. In addition to looking at the visits and who visits what, we can also use some information on who exactly is clicking in the online report. So there's a little mini survey in some of the online reports, and it allows us for roughly 5,000 visitors to infer whether they belong to the investor stakeholder group, an employee, and other stakeholder groups. I would also like to point out that the traffic on the PDF version of these annual reports is largely unobservable. So we're just looking at the online report. However, these online reports oftentimes also include a download section, and we find that roughly 20% of online report visitors also download some PDF content throughout their journey in the annual report. So having said that, let us look at some of the results. Wait a second. Before we do so, I would like to first explain to you how exactly we have tried to make those 8 annual reports comparable. This is kind of a prototypical annual report. It includes, different sections across those 8 annual reports, and we have settled on basically grouping those sections into 3 main buckets. A general section, So that could be the introduction to the annual report, the letter to the shareholders, but that could also include aspects from the management report that are more related to the strategy and the business model. Then we have a financial domain. This could be both the IFRS financial statements as well as the parts from the management report that relate to the description of the financial development of the group, as well as the sustainability related disclosures. And this is primarily the CSRD sustainability statement. So one dimension that we here look at this webinar is that we will compare the traffic on sustainability vis-a-vis these other parts, knowing that there might be, this download section and maybe other sections, but for the sake of simplicity and illustration, we abstract away from these. So to get everyone on the same page, the general section that includes the introduction to our shareholders, those management report contents that are not related to the financials and or sustainability. Financial, we have financial statements and notes, and the parts from the management report that includes the financials. And then we have basically sustainability that also has a general section related to ESRS 2 primarily, as well as topics in the realm of environmental, social, and governance. And so that one dimension is to compare sustainability versus the other sections. And the other one will be within sustainability to basically compare, is there more traffic on environmental vis-a-vis social disclosures. And now, before we show these results, we would like to quickly ask you about your perspective. So if you compare the traffic on general, financial, or sustainability, or more narrowly between financial and sustainability, what do you think? Which section gets more attention by users, financial or sustainability? And we invite you to quickly participate in the poll that Christina will share in a second.
You should already see the poll on your screen, so you can just pick the answer you believe that is correct. And we can already see that about 60% believe that the sustainability section attracts less traffic than the financial part. 27% believe that it attracts more traffic, and 14% believe it's the similar amount of traffic. So, Professor Müller, do you want to reveal your result?
Okay. I guess this is also the prior that I had going into this. And when we now look at these results, we will see that some of us need to update the priors. So this is the key result that compares traffic on sustainability, highlighted in green, with 38% of the visits, to financial, that is displayed here in orange, 22 plus 15%, so 37%, as well as this general section. So if we just focus here on sustainability versus financial, we see that they are basically very similar. Now, I see from the poll that you thought that financial would have attracted more visits. So let us try to kind of interpret this result a bit. So the first thing we do here to benchmark this is to look at the timeshares. So the data also allows us to track the time that users spend on the particular pages. And if anything here, the share for sustainability increases. Another aspect that we think is quite important to emphasize is the content share. So to think about how much space is occupied by sustainability related content vis-a-vis, say, financial and general content. And if you look at this, then 44% of the annual reports here are occupied by sustainability content, and relative to the 44%, I think it is kind of consistent to see that on average, at least, these reports also attract similar traffic on these pages. So put differently, I think it would have been a problem if we found that sustainability occupies 44%, but say only 5 to 10% of the traffic. And so from that perspective, I think there's a relatively close match. We can also see that these front-end parts here like the introduction, the letter to the shareholders and others, they occupy actually a fewer space, but then attract much more attention. That might also relate to the way these are positioned. They are typically in the front part of the online annual reports. And so maybe that drives this result. So sustainability traffic appears to be similar to financial. And now let us dive into sustainability in more detail. Now, if we look into sustainability, recall that we have four main sections. We have the general section displayed here. Then we have the environmental section, which is here broken down into the individual topics that relate to the topical standards. In red, you see the social pillar as well as the social topics. And then here you see the governance at the end. Now, what you will quickly note is that there is a large volume of traffic related to the general section. So what is this general section? Sometimes this is the landing space for the sustainability report, but this is typically where firms talk about, are we fully applying ESRS? How does our double materiality assessment look like? And also they would talk at great detail about their so-called IROs, the impacts, risks, and opportunities, right? And so that would also be positioned at the front of the sustainability statement. So that might be driving this result. In order to get a closer look at the topical interest, we're removing for a second the general traffic. And here we're just focusing on the topics itself, because I think this gives us a bit a clearer perspective on which types of topics are actually driving interest. Now, if you look at this here, the first one in dark green, this is climate. And you see it has a visit share of 23%, a time share of 26%, and that relative to a content share of 17% shows us that there's obviously substantial interest in climate-related disclosures. In the social dimension, the same holds true for the own workforce-related disclosures. Here we see a close match between visit time and content share. And then I think the other topics, it is kind of interesting to see that they mostly map content into visit shares. The only exception that is visible here could be affected communities. I would also like to point out that this is a standard that not all reports included, right? But affected communities here occupies relatively more space as compared to the visits and the time spent on studying these pages. So we can take away from this that the topical interest is high for climate change and own workforce. Those are also the areas where firms attribute more content to, or the standards have more disclosure requirements, but also the general disclosures attract substantial interest. And so taking this together, I would think that you can see that this substantial sustainability traffic is both general as well as topic related. And so obviously we also need to point out and emphasize here that we're looking at data that is released for the first time. So it might also be that there's a certain curiosity or a certain ambition to benchmark each other. And for these reasons, we are now going into further detail to understand better how exactly users engage with financial vis-a-vis sustainability content. So one way to do this is to look at the time spent once a visitor enters a given section. So what you see here is the so-called touching visits. So if a user ends up in the sustainability section, how much time does the user on average spend in that section? And so you can see that those that study sustainability sections actually are there for roughly 3 minutes. And that is substantially higher, at least across these 8 annual reports, if compared to financial in general. Now, you might wonder, 3 minutes, is this a lot or not? Well, the reality is that the sustainability reports, just like the financial reports, are better thought of as an encyclopedia. People come there and they basically have a focused interest and then extract the information and then they move on. So what we don't observe, and I will show you some evidence consistent with this notion in a second, is that firms or that stakeholders, browse through the whole annual report and read it like a novel. So this is not the type of usage behavior. So 3 minutes, I think, is already substantial attention, and it is substantially higher than for financial. We can do a similar analysis when looking at the individual contents of the sustainability statement, and here we see much more time spent on the environmental section vis-a-vis, say, the governance section or the general section. But as you have seen earlier, right, that could also be driven by the content that is available within these sections. So let us move on now to study another notion of, how users engage with the information. And that notion relates to the extent to which, relative to the publication interest, which for all annual reports peaks right after the publication, whether the traffic that we observe is stable or more persistent across sections. So what do these graphs here imply? Here we look at how the traffic evolves over the 3 months after publication. And so what you can see here, for example, the 44% here implies you have 44% of the traffic that you observed right after publication, still 3 months after the publication of the report for, say, the sustainability content. And so the interest seems to be more persistent. Now, that could be driven, for example, by the fact that for the financials, we get the quarterly update and hence people move on to the quarterly report, right? But in general, it shows you that there is still substantial interest even post-publication. And a similar notion is observable if we look into individual ESG topics. Here, and notably the environmental and the governance parts, those are the ones that still receive substantial interest even 3 months after publication. So users collectively, it appears, engage longer after publication with sustainability and especially ESG disclosures. Another aspect that we looked at, and that is displayed here, is where are users coming from? So we are not the NSA, but there is a certain element in the tracking that allows us to at least geographically locate users broadly. And so here we have chosen to locate users either into the own country, that is the country from which the firm is coming from, other EU countries and non-EU countries. And what I think is interesting is to see that sustainability-related traffic is more local as well as more stemming from the European Union. So if you add up those two, those make up for 72% of the traffic that is EU driven, while this number here is a little lower for the financials. Now you could infer from this, well, maybe sustainability is of stronger interest to European folks as well as those folks residing in the same country as the firm. And put differently, you could maybe argue that financials is a more globally spoken language and is more of global interest. If we do a similar analysis here within the sustainability sections, we see that there isn't much of a difference, I would say. So that local EU-driven interest that is higher for sustainability spans across all of the topics. So now, as you can see, we are peeling the onion and we are trying to get closer and closer to what users are actually doing and where they are coming from. And so one aspect that was of interest to us, and that is displayed here in this transition matrix, is to find out if a given user is in a particular section, how often do they transition to an alternative section, or how often do they stay within the same topic. And so this heat map here, or this transition matrix, you can read it like this, that 71% of the users that are in the general section also stay in the general section. Or put differently, 90% of the users that are in sustainability, their next click is also in sustainability. And as you can see off diagonal here, there's little transition across topics. So most users appear to have a focused interest and stay within their topics. And as I explained earlier, they usually also come and go. And the similar notion actually we see when we look at the transitions within the sustainability statement. So 79% of the users that end up in the environmental section also stay in that section. What does this imply? Again, this is consistent with the notion that users are not reading the annual report like a novel. They have a focused interest. So if you wanna integrate alternative pieces of information, then probably if you think in interpreting the transition plan, it would be important to also highlight the financial implications, maybe bundle these pieces of information exactly at this place, because then the likelihood is higher that users actually take a look at this. Now, the remaining slides here focus on the roughly 2.5% of the visits that we can actually relate to specific users. And so here I would like to show you the audience or the stakeholders that are actually contributing to the traffic for the respective sections. So how should we read this? If we focus on the financial section here, we see 39% of the traffic comes from investors. 34% of the traffic comes from employees, for example. Now you might wonder, why do employees that are displayed here in orange appear to have such a substantial, share of the audience across all of these three sections? This is actually a result that Nexa in several other surveys, they have already seen in the context of their other surveys. And so it indicates that employees represent a sizable stakeholder group or a sizable share of the audience. Now, comparing financial and sustainability, I think one thing that you can note here is that the audience for sustainability is broader. You can also see a drop here in the share to which investors contribute to the traffic for sustainability. And related, you can see that there's a new user group here of 18%, and those are so-called sustainability experts. And so those sustainability experts, I mean, those could be, say, consultants, but they could also be people that are maybe ESG analysts or have some sustainable finance connection. So it's a little unclear whether what these sustainability experts here represent. Another way to look at this data is to look at, a given user group and see how is their traffic allocated across the sections. And so one thing I would like to point out here is to, for example, if we look at sustainability experts, 69% of their traffic is on sustainability. Interestingly, public interest, that was hardly visible above, that combines NGOs and the media, right? They also show a substantial interest for sustainability. And if you put this into perspective, right, investor clicks, only 14% of their clicks actually relate to sustainability. Now, the last piece that I would like to share with you is how within sustainability, these stakeholder groups, contribute to the audience. Now, one thing that I would like to highlight here, if we compare general, environmental, social, and governance traffic, is that you see, and it kind of is plausible, 49% of the traffic on social information comes from employees. I guess that makes sense. So employees are a key audience for social disclosures, and that appears to be more mixed for the other pillars. But if you here, for example, compare investors, then if anything, investors have somewhat a stronger interest for environmental than for social disclosures, but also appear to have high interest for general disclosures. So I would like to leave it at this because I'm probably already over time. I'm very much looking forward to the discussion and to further learn from Christina about what she has to share on best practices, how to drive traffic. Thank you very much. You are muted.
Thank you. I'm going to share my screen now and show you some examples of digital reports that try to enhance the user journey when it comes to ESRS and the CSRD statement. So the first report that you can see here is the BASF report 2024. You can see the landing page here, and when we scroll down, at first you can see the CEO statement where the CEO comments on the year 2024. You can see some key figures as well, which combine financial KPIs and ESG KPIs. And then you can see that BASF dedicated a whole section to the ESRS standards. So in this, we call it word cloud. You can see that they report on each standard. And if you, for example, are interested in climate change, you can click on this button and you can quickly see which sections you can jump to. So they split it up between the whole chapter, so the E1 climate change chapter, and then subchapters of E1. So for example, if I'm interested in strategy and governance, I click on this link and I jump to the strategy and governance section of E1. What you can also see here are highlighted disclosure requirements, so the users are also aware of the fact where they are in the report and what the section is about. And you can still use this navigation to click through all the chapters. So for example, if I'm interested in metrics, I'll jump here and I can see the metrics that have to do with the chapter. What BASF also included is a ESRS index, and you can reach the ESRS index via this box here. Here you can see all the disclosure requirements that are listed in the ESRS index. So for example, I can click here and jump directly to the line in the ESRS index that deals with the transition plan, so disclosure requirement E11. If I'm interested in the actions, again, I can click on the link of actions and I jump back to the E13 disclosure requirement. So that's a way how you can navigate through the report and how you can make it easier for your users to find the things that they are looking for. Of course, you can also add links to other sections, for example, the EU taxonomy section. Exactly, that's an advantage of a digital report here. A completely different example is the one of Adidas. What they did and what they thought of is how can we make the ESRS accessible to everyone? Because when you saw the BASF report, it's the CSRD statements are very, very, very long. They are full of text and tables. So if you're not familiar with the ESRS at all, it's probably hard to navigate, for example, for an employee or for a person from the broader public who is not familiar with the structure of ESRS. So what Adidas did is they introduced overview pages. For example, here you can see the overview page for ESRS 2, where they wanted to show what is CSRD reporting about in the intro text, and then they're showing which standards they report on. So you can see they're also reporting on all the standards. And they also added a short information on their double materiality assessment process and how it worked. And they tried to visualize it by using a graphic rather than text on this page. So if you're interested in what Adidas reports on ESRS E1, you can click here and you jump to a so-called dashboard, which serves as an overview page and should give the interested public a feeling of what's important for Adidas. So they picked out their most important impacts, risks, and opportunities, and also added a link to the respective page. So if you say, okay, I'm interested in the IROs and I want more details, you can click here and you jump directly to the page where they talk about the IROs. Going back to the dashboard, you can see that they also added other illustrations. For example, they show the climate strategy levers with an animated graphic, also including a link to the respective section in the report. They show some of their targets with the most important KPIs, so users who are especially not familiar with the statement can see at one glance what are the most important KPIs that we want to show. They also added progress bars, so you can see how far away they are from their target and how they are progressing, and a short info to the policies. So those are two examples of how you can make your user journey easier for the users who are navigating through your report. And I think there are still a lot of things that are to come in the future. Looking at the time, I would say we can jump to the Q&A section now and take a look at the questions, because there have been a couple of questions already. Professor Müller, I will just start at the beginning and then we'll answer the questions. So the first one is, which countries are the annual reports from? Oh, and I saw that you already answered the question.
Yeah, but it's probably worth highlighting this again. So we have annual reports from Austria, Germany, as well as Portugal, with most coming from Germany.
I think we also answered the second question, how the traffic changes per user group. That's something that you showed in the presentation already. The next question is, are those visit times scaled to content density?
This is actually a great idea. So we basically, in this analysis of the minutes spent within the sustainability section, we have just counted the minutes, but as we have shown earlier, right, it's also a substantial share of the content. So this is something that we could do in a follow-up. Is a very good point, but we have not yet done so. Only when I presented the visit shares vis-a-vis the content share, I think that gives you a feel for that. But the density of the content, I guess, is not just, how much content there is, but also say how complex it is. And so we are working on characterizing each page within sustainability, say in terms of the images, the tables, the complexity. So this is a great idea, but we have not done so yet. Thank you.
Okay. The next question is the assumption that all traffic or visits are from human viewers? I think that's something that I can answer. Yes, because we filter all the bots before we track the statistics. Of course, there are some bots that might slip through, but usually bots mean that they are just clicking at the page once and then leave it again. So it wouldn't resemble the long amount of time the user spent on the page, which we already saw in the results that Professor Müller showed.
If I just can add, so the one perspective is to say, okay, those are bots that just scrape the internet. But if you think about AI, say ChatGPT and/or agents, right? I think it is quite clear that, and I think there's a related webinar by Nexa, that information from companies can be more easily picked up by, say, ChatGPT or other large language models if it is in HTML in an online report vis-a-vis a PDF. Huh? So in that sense, what is a human view might change in the future.
That's true. I think I'll skip the next question because you've already answered the data source question. Which industries do the reports belong to is the next one. And also, do reports from ESG sensitive industries tend to attract more traffic or more attention?
Yeah, so I mean, it's a broad umbrella of industries or sectors, as I've indicated: consumer goods, food and beverage, healthcare, resource transformation, transportation. I think the notion, is it kind of more sensitive? It would be super cool, and we will probably do this to, at least for those 8 companies that we have, identify whether some of them have, say, controversial ESG topics or that have led to reputational risk incidents. And so then try to track whether for these particular companies we observe in those topics a little more traffic. Yeah, I will say though that sometimes we also see that firms, if they are, say, in the financial domain, if they are unfortunately in financial troubles, then obviously the financials might also occupy way more traffic.
Okay. The next question is there potentially a bias that employees are more likely to be tracked by the system? Do you want to say something, and then I'll add something?
Yeah, I mean, so tracked by the system, I mean, in general, I think we need to differentiate here the data source that we used. This is a very standard website tracking software, and I don't think this would have any bias in tracking employees versus others. It just tracks website visitors. When it comes to the survey itself, that is a little pop-up that you get as a visitor in some of the online reports that we studied. And there you could argue, well, maybe employees just have a higher propensity to participate in the survey. And it could also be that for some reason they have a higher propensity to use the online report vis-a-vis the PDF. But this is something that is hard to tell with the given data that we have.
maybe to add on that, we are doing this user survey where we ask the users, who are you and which topics are you interested in, for the 5th time in a row now. And the share of employees which are coming out of the results is always more or less the same. So it's always about 1/3 of users who are interested in the annual report, and 1/3 is the financial community. So the results on that are pretty stable throughout the last 5 years. The next question is, you mentioned that stakeholders spend more time reviewing sustainability reports than financial reports. Could this be because sustainability reports are generally more narrative and descriptive, whereas financial reports tend to be more technical and numerical?
Yeah, so I would like to emphasize once again, this is just within what we can observe, right? It could well be that, some stakeholders that are especially interested in the financials, they just take the PDF, right? So the total time spent on a given piece of information is something that we cannot study. We can only study it within the annual report. That being said, I think it is definitely an interesting line of thought, and it relates to what was, I think, asked earlier about the say the density of the content. And so this is something we have not yet explored yet, but it could actually be because of the characteristics that you point out. In addition, the financials haven't really changed for quite some time. So people are used to, working and processing those, while here the ESG information, some of them is really new, and so that might also contribute to some of the differences in the time spent.
Okay. The next question is, do you have information on visits on the online interactive version versus downloading a PDF version? I think that's something that you mentioned at the beginning.
Yeah, so here's the point. All of these online reports, they typically have a download section. And so that we can track, and I can tell you that 20% of the visitors do end up downloading something. Roughly 5%, go directly to the download section, and 15%, they are browsing the sustainability or the financial report and then download something. What we don't observe is if the firm in, say, the investor relations page has a separate link that goes directly to the PDF. This is something that we don't observe, but maybe one of the companies that we have analyzed the data for can get this data point, and then it helps us to put this better into perspective.
Exactly. Another question from is, do you think there is some kind of systematic partitioning between users that access this information through the interactive web pages versus through the PDF reports? Could you confirm that your study concerns traffic only on the former?
So the latter I can confirm. And so I would also like to emphasize this is actually the first time that, really granular traffic data was studied. I would hope that many companies see the value in having such information to begin with, and also to having this information being analyzed. And so we come here from a world in which, say, for SEC Edgar, we know the number of times a 10K has been downloaded, but we don't know what people are doing within the 10K. And so in that sense, it is very hard to think about potential partitionings based on prior evidence. I do have, however, the hypothesis that many, say, experienced professionals will probably directly, resort to the habit which they have, get me the PDF, and then I'll, Control F, find the information, and I'll do what I want. Many companies these days also release information packages, say a workbook, could be an ESG stat book, could be a financial stat book, where you directly have the Excel spreadsheet, say, for analysts to do their calculations. So it could well be that some some of the more professional users, the investors and their analysts, that they either directly work with the PDF or they go through commercial databases like Bloomberg and or S&P that directly, basically, once this data is released, have this data on the platform, at least when it comes to the financials. That is actually not true for ESG information that is only reported with a considerable lag by those information intermediaries. So something to consider, but it's hard to tell. I would like to know more about this. I share the same interest.
Okay. Next question on investors. What key elements do investors focus on when reviewing sustainability reports, and how do these factors influence their decision-making process? Does sustainability reporting truly impact investment decisions, and if so, in which ways?
Yeah, those are great questions. So I would like to say that, prior to having this data, the only thing that I knew was that CFOs told me investors have never asked me about this. No one is reading this. Okay, so that has been the common perception. Now, at least we know some appear to read this, right? What they do with this information, I think this is apparently something that would be extremely important to know, but this is something that we simply cannot observe. What we can observe is that investors, they appear to study, if they look at sustainability, if they visit the sustainability report, they look at the general section. So try to understand impacts, risks, and opportunities, how the double materiality assessment worked, as well as the environmental section that is of interest. There has also been groups of investors, for example, in the Netherlands by Medion, that have issued a letter to the supervisory board as well as the audit committees to point out that the DMA is something that they would closely scrutinize. So maybe that helps you answer some of these questions, but some of them are really subject to ongoing research, I think.
Okay. You said companies could respond to that come-and-go behavior by bundling topics. Sorry, so integration doesn't get missed. Do you have some example for relevant cases?
Absolutely. So we currently have this. So we have two main debates right now. So the one is anticipated financial effects. Okay, so standard setters are thinking about, do we make this mandatory? Do we want companies to quantify this? Where should this happen? So there have been proponents that ask companies to put more of this information in their financial statements. And so I think if you think about the topic of climate change, right? If you actually want to give users a good perspective, then maybe you're not just, disclosing, as I said, information on the transition plan and or information on your emissions, but maybe you also connect this directly to the financial implications that this might have, because it's unlikely that users will also go into the IFRS financial statements and dig up in the notes the paragraph that explains how climate-related matters affect the financial statements. And so the second question that's kind of currently discussed is this notion of connectivity, right? And so connectivity means making sure that financial and sustainability content, speaks the same language. And so I think I would rather group very relevant financial content directly with sustainability, or relevant financial content to group sustainability there to give users directly the core information package.
Thank you very much for your answer. We're nearly running out of time, but I think we said it's okay to answer the questions that are still here and stay in the call. So if you're interested in the answers of the questions, we would still do them, right?
Sure.
Okay. Do you have a view on whether companies have received a lot of questions or inquiries from readers, investors, or analysts?
Yeah, so I also serve on the Sustainability Advisory Council of DHL, and I'm also part of a working group in the German Schmalenbach-Gesellschaft, where academics and practitioners come together. And at least when it came to the shareholder meetings, many of the companies seem to have prepared for many, many questions, and they noted there haven't been many questions. And so that could mean that the relevant content has answered these questions. So there are no residual questions. Could also mean that they are not particularly interested in this topic, but it could also mean that a different forum takes up these questions, like the conference calls. And so what we are currently analyzing is the extent to which post-publication of CSRD, say in the media coverage, NGO campaigns, but also analyst conference calls, whether there's an uptick of the discussion of ESG topics relative to both the period prior to CSRD statements being published and, say, a group of firms that are in a similar sector but not subject to the CSRD reporting mandate.
Okay, I'll also jump to the chat because I also saw that there are some questions there. What are the lessons learned for the next reporting season?
So I think one lesson that I learned is, so it actually, all the work that you guys put in to prepare this report and all the cost, at least it meets some demand and it's not read by no one. But more practically, I think one thing that stood out for me is that companies should use more flexibility in having, say, mini topical overview pages. So that means before you send people into, say, the compliance part of climate change disclosures, why don't you start with an overview page where you, as a company, highlight the most important pieces? Because those overview pages typically tend to attract way more traffic, and it allows you to, say, more like historically in a management report, to provide that executive summary in that spot. Right. So that could be, I think, one practical implication that I would give, as well as in response to Ferdinand Fröhlich's question, the bundling of financial and sustainability information where relevant.
I think there's another question that leads to the same topic. Is linking between sustainability and financial section to avoid duplication effective if sustainability section readers are mostly staying within the sustainability section and financial readers are staying within the financial section? Or do you think it might be necessary to duplicate the key information in both sections to help ensure that this is seen? I think that's a really interesting question.
Yeah. I think in selected cases, I do think it makes sense to, directly, at least include a hyperlink. At least show people the linkage. You might not have to really have redundancy, but just show relevant linkage. So maybe that could be a compromise. And it's also not clear that, just because in our data, people, when they come, they stay in a given topic, that they don't at a later stage or at a different information source, complement what they learned on sustainability with financial information. But some linkage, at least when it comes to that type of usage that we observe, appears to be helpful. But you could also say, please, let's create clear boundaries, and everything that's financial should be in the financial, and then remove the financial pieces like the anticipated financial effects. But then it should just be clear, the financial implications are discussed elsewhere, right? So that could also be a kind of linkage that I think could represent a compromise.
Perfect. I think we covered. There's a new question. I'm sorry. Do you have insights on some of the more annex pages of the sustainability statement? For example, the methodology pages or the auditors.
Yeah. So the general section, for example, oftentimes also includes the basis for preparation and stuff. And so interestingly, maybe this is related to the first time adoption. This is also where we saw meaningful traffic. When it comes to the annex parts, we didn't analyze them separately, but this is something that we could easily do. So I would be happy to follow up on this at a later stage. Yeah. Sorry.
And really, there are two more questions actually. One is, in your view, are annual reports, so sustainability, financial, and integrated, as we know them, actually outdated formats?
So if I had one wish free in terms of advice, I think the kind of the delegation of who does what in the financial domain is actually something that we should use as a role model. So when we group something in the financial section, it's either the management report part related to the financials or the IFRS financials. And here, if I were a standard setter, I would say there's a kind of a more compliance-driven sustainability statement that mirrors the consolidated IFRS financial statements. And then in the management report, you basically have management that basically addresses issues selectively from that sustainability statement. So that, I think, would also allow companies to, in their management report, have a summary, a packaged version that would also be more conducive to connecting both their commentary on the financials as well as the commentary on the sustainability part. I mean, personally, in terms of is integrated, out of fashion or not. So I think, the question of whether integrated is helpful or not depends on whether sustainability will be step by step by society integrated into markets, into the financial world. And I think, we don't know what is coming politically, but over time, there are some people that say there's an inevitable policy response, and if that is true, then that integration will happen over time, anyways. And so, therefore, I don't think integrated reporting is out of fashion. I think it's very topical now more than ever.
One question I see in the chat. It's the last one. Errors in sustainability reports. How serious? What can be done if the company or consultants preparing the report don't want to do a restatement?
Errors.
Yeah.
Okay. So I don't know. I think the enforcement has not been yet concluded, and I personally don't know of examples where there have been major errors. So I don't have any evidence or no example related to this. So I can just tell you that we have seen, not in the 8 reports we looked at, but in the full first wave of CSRD sustainability statements, many restatements, and those restatements related to 2023 figures, say in the topic of emissions, and they largely didn't really reflect errors, I would say. They largely reflected improvements in the methodology and data quality that then led companies to the restatement. So if you're aware of errors, please share them with me, and I'm happy to take a look at them and then give you my perspective on that.
Thank you very much for answering all those questions. This was the last one, so I think we're through. Thank you, everyone, for having such a huge interest in our study and our results. There will be a comment and presentation that we can send through if you're interested in it. Just write a mail to webinars@nexa.com and we'll send it through once it's ready. Thank you a lot, Professor Müller, that you did this study with us. And
thank you to you, but also the companies that were willing to let us analyze the data, and to everyone here for the discussion and the many inspirations that we have gotten for future research. Thank you very much.
Exactly, and we'll keep you posted if there are new results that we want to share with you all. Thanks a lot. Bye.